Alright, how's it going, everyone? This is Anon. None of this is financial advice. This is all for entertainment purposes only. Alright, so I know we got a late start, but I was doing that because I was trying to make this a little bit easier. I know in the past people have complained that, it's hard to break down where things are. So I just downloaded some sort of like extension onto OBS that's supposed to let me do timestamps, and I am not sure if that's going to work or not, but I'm going to try it and see if anything happens. And I don't know, I guess I can check it out and see if anything's... Oops. Oh, is there something going on? Hotkey, not recording. Did it do it though? No. But it does do something. So it says there. Not. Try it again. If I hit that, oops. Can't be in there, I guess. Close it out. Alright, so let me try that again. See if that does anything. Hotkey. Not recording. Alright, so that clearly, hotkeys are activated, not doing what I'm needing it to. But the idea behind this thing is essentially that I'm going to be able to, hold on, sorry, let's put that down. I should be able to timestamp stuff, and then in the future we'll be able to, don't forget to send the Discord reminder. So the bot's actually supposed to do that for me. Did it not do that? Let me just pull up Discord and see. Did the bot not send the thing out? Alright, let's see. Oh, Huxtable's got me. He posted in there, and then I guess... No, it put in there. Yeah, it just did. Yeah, it took a little bit of while. What's that say? While Walmart Mayo? Did that come out of order, maybe? What's up, Danny? What's up, J Dill? Earthium, When Moon. Yes, what's up, dude? What's up, Goat? It's CJ. Alright. Hey, yo, what's up, awesomeness? Alright, yeah, Walmart. Yeah, they lowered guidance, I saw. Yeah, there's a bunch of stuff that went on today. I mean, obviously, like, Redbox popped off, but I think that was just like some short covering because they needed to actually, like, I mean, that thing been corked up for a while, and they needed to cover some probably FTDs and stuff like that, so they probably just let it run today and they'll push it back down. Might go another day or two, but then it'll go back down. Walmart helping out my SPY puts. It's still 95, or 395 on the SPY, so not down enough then. Yeah, DTC. So DTC had no news. Like, I was thinking, like, oh my god, something must have happened. I looked over at DTC. I'll pull up the chart just so you guys can see. So this is kind of funny. So basically, WEBR went down, so DTC went down 10% today. For no reason. Like, no negative news. Just overall, like, oh, retail sales are down across the board. Let's go ahead and hammer this company, this outdoors company. So, you know, Jim Cramer was crying about Walmart. When's Jim Cramer not crying? I mean, if you want to know who Jim Cramer really is, just watch that video of him saying, like, nothing we do in the market is honest. And that's who Jim Cramer really is. He's paid a good amount of money to tell people what they want to hear, or just lie to people outright. I mean, like, he was literally sitting there saying, oh, well, you know, everything's fine right before the crash. And then once the things were crashing, he's like, you know, blaming the Federal Reserve. You got to do something. Like, people are losing their job. Like, dude, you're part of the problem. But yeah, who cares what I think? He makes a lot more money than I do, shilling for the mainstream. So, but yeah, so I guess that's not gonna work there. But anywho, I'll try to figure out the hotkey thing tomorrow. I was trying to do it right before, but I was like, I need to start the stream. So, all right, let's see. Maybe I'll figure it out later. All right. Can you explain how the September warrants work? Yeah. So for the stock, for any stock, this doesn't matter for Aterian or any sort of stock. If you have a warrant out, right? Warrants are typically like long calls, except for the company issues them. They're dilutive in nature, and the other part of it is you have to be above the strike price to exercise them. So, for example, those particular September warrants, the 7 million of them, will not be executable unless the shares are over $3.20. So right now we're sitting there at 237, right? That's what we closed at today. So what ends up happening is they have to push the stock back up at some point in the future for them to unlock those warrants. So, you know, at this point, that's where you're at. Like, for, you know, eventually for them to even unlock those warrants, they're going to have to push up the stock price. You know, you have that same sort of thing happen on a lot of these things where they're trying to reach a certain level and they get pushed up just because underwriters want to get, you know, their money out essentially. So these, you know, underwriters are technically allowed to. Who owns the warrants? Armistice Capital and High Trail are the two that own the warrants. And you guys, like, so if you're going to be listening to me, I want you guys to become comfortable with doing some of this stuff yourself. Like, it's easy, and I want you guys to hang out, but I also want to teach you guys how this stuff works. Like, the goal for me here is I want to share this stuff with you. So, you know, teach a man to fish kind of thing. Like, it only makes retail in our Discord even better because then more people are knowledgeable. And, you know, if you like this stuff, like, this is kind of fun. Like, if you, like, you know, learning all this stuff is fun. Like, the trading stuff, that can be stressful because obviously money goes up and down. But, you know, learning how all these pieces work, that is a fun aspect of, you know, learning the market. There's a lot wrong with the market. And I can tell you the market is a corrupt cesspool of greed. But at the same time, you can make money like you wouldn't believe in the market and lose money like you wouldn't believe in the market. And, you know, you can be unsuccessful and have a couple great trades and you're back on your feet. So as far as, like, you know, like, I've noticed with me, like, I started out investing in companies that I was looking for long term. And I'm going, okay, I think this is undervalued. And because I look at things that I think are undervalued and I stick with them, those things tend to, if I'm right about them, which I have been about a couple things. Like, you know, I bought Amazon long ago. I bought Tesla long ago. And these are things, like, Tesla went through a long period where everyone thought they were the worst thing in the world, and all you heard was constant FUD, and these things are awful, and, you know, nobody should own the stock, because people were short on them. They wanted to push them out. You know, when I first bought Switch, that was a perfect example. If I show you Switch, when they IPO'd, I bought them. And if I go back, and maybe we have to go to the weekly, but let me see if I can go back. But basically, when they IPO'd, they got all the way down to, maybe that's not the best view. Let me see. Let me try it maybe on Webull, because I can drag that one around. So if we go here to Switch, right? So I looked into them, and I thought they were an interesting company long ago. And what I said was, okay, when they IPO'd, they were like, I don't know, like $20-$30 a share or something like that. Like 25 a share is what they started at. And look, they quickly just nosedived, right? And they went all the way down from 25 down to $6. And like everybody was like, you need to sell these things. This is an awful company. You guys were all messed up when you invested. What happens? From 6 all the way up to 33. So I'm used to trading and looking at things that constantly look like they're awful, but in the long run, they'll be fine. So like, Tesla, if you look back in their history, Tesla went, at one point I was down I think 90% on my investment, if not more. I'll have to remember how bad it was, but I think I bought them at one of their peaks before they went on that massive run. I bought them, I think at 60, and then the stock went all the way down to I don't know, it was can't remember when I bought it. I think it was it was 60, so it would have been around this thing, and then it took a massive dive at one point where I think it was it went down to 20 something, and I bought it at 60 or something like that. So that's I went down a huge amount on that, and I was considering selling because I was oh my god, did I do something wrong? Maybe I'm not, but in the long run, it went from 20 to, what was it before it split? I don't know, 1,000 or something. Yeah. So anyway, there's a bunch of these stocks, and IIPR, that one actually did pretty well off the bat. But even in the beginning, it was just kind of chopping around and down here in the teens, and then it ran all the way up to its peak 200 and something. I actually took profits up here on the first cap in the 200s because I was I bought this thing for $10 a share and had a couple hundred of these things. So, it's now back at reasonable levels, and I'll probably actually consider buying back when it hits down up, in this range right here. Because if you look, the MACD is starting to cross over, so I'm going to probably re-enter the position somewhere in this loading zone. I think we'll see if it kind of consolidates a little bit, and then, or if it has a little bit more to run down. But, once again, I'm used to these kind of companies that have these whipsaw, and it's not for everyone, but at the same time, Aterian's one of the ones like that. So with Aterian warrants, for example, right? Aterian got themselves in some trouble when they basically violated their debt covenant, and then they had to dilute. And so this last thing of private placement now gives Armistice Capital and High Trail access to shares at $3.20, but for them to actually exercise them, the stock price has to be at least minimum $3.20. So it in sometime in the future they're going to push the stock back up to that price, if not higher, because normally what happens is, if you look, they will let things run higher before they start actually pushing them down. Why? It's because if they brought it right up to 320 immediately, right, and started selling shares, they would drop below 320 because it's dilutive. So they have to run the stock usually higher to even dilute. So you might see a run on Aterian to 5 or 6 or 7 before, and then at that point they start diluting, because if you start it right at 320, you're going to go below the threshold, and then you're going to have to keep pushing it up constantly to get it back up there. If you start higher, it allows them to actually bleed off those shares and not completely, so they may have to start with 7 for them to actually start diluting. So there you go. But yeah, that's who owns the warrants, is High Trail, who's a investor, and Armistice Capital, which is a hedge fund investor. Doing my first trade, or it's my first TA that I did myself. I learned everything Discord, posted in the main trading floor. Hey, congrats. Yeah, it's a good place to practice and learn, and, if you're not part of it, you're more than welcome. It's free. The only reason we did this was just to basically try to, help people out, and, trying to basically get a good group of people together. And, I think when I first started it, it literally was just 10 10 of us in a Discord talking about Aterian, and it's turned into this kind of like, like there's a lot of people coming in and, they want to know stuff. And so I think it's a good way of learning. And then if you have the skills, you can teach others. If you want to learn stuff, ask questions. There's plenty of smart people in here. I am not like, there's massive amounts of resources. Like DZ is incredibly smart. He's got me licked in a bunch of different areas. There's just a whole bunch of different people inside the room that know a lot. So that's a good thing. Let's see. I need to basically figure out somewhere on these time. Let's do this. Hold on. Let me try this real quick before we get into tickers. First, let me tweet it because I always forget to do that. Okay. It's being slow. I'm hardwired in. It shouldn't be this way. Here we go. So we need to go to content. Pull the website. Okay, here we go. Oh yeah, if you can hit the like button, that'd be great. It gives the YouTube algorithm. Maybe we'll get some more extra people in who want to talk about different stocks. All right. We do have to cover Tblt, obviously. All right, so we're good there. Need to get this stream and tweet it out real quick. Twitter. And I have to do a lot of editing because here we go, starting to get there. Only thing that was super bummer was WEBR's and news was not great timing because obviously it also affected DTC, which it shouldn't. They have nothing to do with each other, but it's the market, so of course it's going to have a massive effect on it. Because I guess they consider both of them consumer, like e-commerce, like slash, I don't really like. They sell grills, like they shouldn't have anything to do with each other. The other one's a stove, but I guess the numbers they're seeing because of like the Walmart guidance and like, so they're basically going like, okay, well these things are all going down, so let's beat on these small caps and these, anything that's. All right. I think we're close to being done. The Twitter thing. I have to delete out like everything because if they only take hashed like the $ ticker symbols on there. So I've got to cut out all the other stuff and then post the video. All right. So anyway. I'll get back to the normal stuff there. YouTube link here. We're going to cut and paste it. And then we should be good to go. And then we can start getting into. No, I didn't. That's fine. Whatever. Okay. Before we get to tickers, does hedge funds bad for... Make sure Jonathan's writing. Does hedge funds bad for retail when we see them? Always had that question. Do you want to write that a little clearer? Are you asking, are hedge funds bad for retail when we see them? I'm trying to figure out what you're trying to state there or ask. If you can. does hedge funds bad for retail when we see them? I don't try that again. Can you rewrite that a different way, because that's not proper English, and I'm having trouble understanding the contents or context, I should say. Are hedge funds bad for retail investors? Hedge funds are basically like, it depends on what you're, I mean, if you're on the right side of them, then yeah, that's fine. It depends, because hedge funds do a lot of things. They typically hedge, which means that they buy shares, they buy calls, and they buy puts. And what they do is they basically play things up and down to make money. And sometimes they're very profitable because they have a ton of money at their disposal. So, no, they're not just there to short stocks. They are there to basically make money any which way. So their job is to basically, typically, they're there to basically make as much money as they can. And how they do that, they can push the stock up, they can push the stock down, they can control the stock if it's a small cap, like, you know, a lot of these ones. Small caps right now are like probably the dirtiest part of the entire market, because when you have a couple $1 billion at your disposal, you can literally control the destiny of a company and bully around the stock price. So for small caps, hedge funds are basically like the worst thing possible, because if you're long, especially, you know, if you're short, that's fine, unless they're driving down the price when, you know, you're long, or if vice versa, when you're shorting something and they just push something up because they can. Their entire goal, though, is to make money any which way possible. So you have to think about it like this: they're kind of like a chaotic neutral. Like, they're there to just basically make money, and if you're on the wrong side of them, well, that's your fault in their eyes. They could care less about the actual companies that their money's in. They just want to control the price and make it do what they want to do. So when they choose something to go long, like, for example, Citadel actually went long on Tesla when basically Tesla was getting beat up. So most of these different, like, hedge funds and large institutions were all like low on them, and Citadel actually helped like squeeze out basically these short positions against Tesla, and every time they did that, they raised more money, and so there became like a symbiotic relationship between Citadel and Tesla, because Tesla, it was in Citadel's, the investment firm's best interest to basically have Tesla run, because they were long on them. They were net long, whereas all these other people were net short. And when they squeezed the other people, they made a ton of money. Now, fast forward, then Citadel becomes the enemy of GameStop, because they were trying to drive it down because they were net short on them. And now Citadel, all their dirty practices become kind of out in the light, because they're the ones people are paying attention to. But overall, like, hedge funds are just like there to make money. They could care less about you or the companies they're investing in, unless they have some sort of intimate tie, like they Citadel did with Tesla, where they were like attached at the hip, and those were So I thought it was interesting that Elon tweeted that thing about shorts. I think he did that, and then he never said another word about it, because I think my guess would be Ken Griffin or somebody from Citadel was like, dude, we like bailed you out when you guys were in the muck, and now you're in the S&P 500. Like, shut your mouth about this. Because you noticed that everyone got super quiet after that. And Elon didn't egg it on anymore. So I think that's probably the connection, that he may not have known Citadel was short on GameStop, and for example, but yeah, hedge funds in general, like, they're everywhere. Like, if you look at like a 13F, they're all over the place. Their hands are in pretty much every area of the market, just like a BlackRock, or just, it all depends. So Zoom out probably. It's harder to see. Okay. Let's see. Okay. Did you notice the 3% and negative 3% after hours on Aterian? No, I'll be honest. I don't even watch after hours on Aterian because it's all nothing's meaningful in after hours. Like it literally takes like a couple $100, and you yourself can push the price of Aterian up a couple, like 3%. Like literally, if you just slap the ask in the after hours because there's no volume, you can raise the stock price like probably like 6% if you have enough money. Just like before algo, puts up a wall. So no. Yeah, so that doesn't matter. It's not psychological. It's basically retail traders messing around with it, and the algos, the Sentry bots basically just throwing up things if it gets out of hand. So, let's see. One day I will learn to stock, but for now I'll just keep eating big L's. Well, you got to eat L's before you get some W's. So, all right. Do you think Ater reaches 7 if there's warrants exercising? You push down for a while. Yeah, I mean they need to basically push the stock price up to unlock those warrants. So at some point you're going to see probably a run to at least minimum 5 or 6, just because they've got to unlock that 7 million warrants, which means they have to actually create a reason for people to be buying in while they're trying to exercise their warrants. If not, as soon as they get to 3 and they start exercising warrants, the share price would just drop, and then so they have to give themselves a buffer basically. So they're going to have to get retail to FOMO back in to basically get people excited and to be selling into the dilution, or at least have people willing to trade out. So because if we get up to, for example, like 6-7 again, that's going to be put a bunch of people that have been holding for a long time in possibly profitable areas if they've been averaging down. So like if they do that, they know that they have to drive the price high enough to basically account for those people who might sell, and at the same time sell their own or exercise their own warrants. So just throwing it out there. Let's see. Symbiote is a great description of hedges. Yeah, that's a good word. They're around. They're part of the ecosystem. It all depends on, what side you're on and what side they're on. Yeah, but symbiotic. Right. All right, let's see. I just live. Hey, nothing wrong with living. All right, let's see. What's up, Anon? Your thoughts on UVXY and the FOMC? Okay, so overall, the VIX has been getting crushed, and they're trying to push down, especially the VIX futures, which is the UVXY. UVXY basically works off of the M1 and M2 futures. Let me go ahead and pull up. All right. So as you see here, the VIX futures, not super high, 25, 27. You're going into this basically plateau. When you will see UVXY rise is when these things start steepening. Like I can go back and show you guys if you want to look at historical prices. Like this is deceleration. UVXY would probably be tanking during this time, like especially these two. But for example, if we go to 20, let's look at January 2020, get prices. All right, so what you'll see is when this got super high, right? And that's back in 08. But anyway, you can see right now it's decelerating right here. VIX was quite high. But when you start seeing it curve back up, especially on the M1 and M2, that's when you know. So this must have been like the .com crash and '09. So we're still in like the recession here, like this. Like this is where the VIX would start actually be rising. But like obviously this is 38. We're only at 20 something right now. So if we go to like current, this is still pretty plateaued and it's not really doing anything. I expect this at some point to spike heavily, but at this point right now it's just being shorted down because so many people are like short. So basically what it's going to take is they need basically people not to be in position to make money on the stock market going down. So they need essentially, how do I put this? They like when somebody wrote that article about retail needs to basically like take the L so that the markets can capitulate. Like that's not that. They're not. They don't want retail traders making money on this. They want to burn as much money as possible every single week. And so, in stocks, there has to be winners and losers. So if everybody's expecting everything to go down, what they'll do is they will push the price up to basically burn out all the bears, and then when they feel like it, they'll tank it. Which means that essentially, when everybody else has given up hope, right? So this entire run, right, you have a couple things here, right, a couple things here where like there's dips, but for the most part, bears were just getting absolutely torched, right? So here, everybody turns bearish. Well, what do? They've got to, the reason why these things don't run straight up and straight down is because you need basically people to sell and people to buy. And so but when things got all the way up here, because I was bearish around here, right, the 340s, I drew a line. That's when I became super bearish because I thought this was going to be a dead cat bounce. And I thought we were going to head down lower because I thought at the time vaccines weren't invented, all these things were, so I was super bearish during this time. So what they did was they kept pushing up the price. And so finally I was like, okay, this is it. This is when the election cycle for the US, this is when it's going to be. And I should have known better because what ended up happening was obviously you push to all-time highs. And every week it seemed like it was just going to never stop. And so finally around here, this is when everybody that was a bear was like, maybe this is just the new normal. And what do? That's when they start taking their money out. And that's when they start selling. And so what they did was they've had a whole bunch of sell pressure. You can see here on the daily volume. Or sorry, this is weekly volume. So these big reds, that's a lot of people selling, right? But look, they're pushing the stock price, the SPY up, but it's on low volume. Like, look at the weekly volume, right? The weekly volume's low. The bigger ones are actually here, like where they're actually selling like a good amount. This is getting pushed up on low volume, which means that that's not a true like strength signal. They're basically doing a head fake. So I do think at some point they are going to have the VIX spike, and people who are bearish will probably get rewarded down to the 340s level. But yeah. All right. I remember my finance professor telling the class to never ever work at a hedge fund. I took his advice. He believes that hedge funds should not exist. I mean, so here's the truth about hedge funds. They make a whole lot of money, and they basically serve the rich. They allow them to do a lot of things that they would probably not have done themselves, because these are people who knew the market pretty well. The problem with that is they also leverage very heavily at times, because obviously when money's cheap to borrow, it's and they can also always get another. There's a lot of things that are like problematic about the entire market and leverage and how it works. And it seems like every single time these Wall Street a-holes get out of line and just blow up our entire economy and the market, they just will get bailed out by the U.S. taxpayers. So there's they never get their bottom slapped when they actually get in trouble. Like, there'll be a sacrificial lamb here and there, like Bear Stearns back in like 07, 08, whatever. But like, there are tons of these things that should have been just absolutely destroyed the last time, and we were forced to bail them out. They're like, oh, well, these things are too big to fail. No, they weren't. Like, they should have been absolutely torn apart because they used unsafe practices. Some of these banks should have been absolutely just destroyed because they were using all these bad practices, and yet they got a slap on the wrist, and we lent them huge amounts of money, which they didn't have to. Just even banks that didn't even need it were getting money during that time because they're like, oh, we had to fix this. And because most people don't understand how all this stuff works anyway, they're like, well, we'll have to throw more money at the problem to make things better. And all it did was just encourage. It's like, okay, well, we won't ever get in trouble for anything we do. And hedge funds are a pure example of that, and that's why people probably don't like them very much. I mean, look at my name. It's because, not every person that works for a hedge fund is a bad person, but at the same time, what they represent is basically like something that's not great, which is the elite have their money put in the hands of irresponsible people, and then they essentially just do whatever they feel like, get even richer based off other people's. They're not creating anything. Like, at least some of these companies, they create things. These hedge funds, they essentially are there just to be parasitic and make money off of other people's money. Like, so, yeah. All right. So, tickers, we can start there. Let me do this. Let me pull up the video so I can at least write it down for myself, because obviously my thing didn't work. But yeah, if you can slap the like, that'd be great. Just pulling up YouTube now so I can look at the timestamp. All right, so we'll start tickers here, and I will pull up some sort of like text or something, or notepad. All right. Where is it? Okay. Hotkey's not working, but that's fine. We'll go ahead and say at. Oh, it doesn't even show me my timestamp? How far in are we? 37-ish? I'll say 37-ish. We'll start with, what was it, Peel or something like that? SEEL. SEEL. Okay. So, SEEL. And let me pull up the daily. Okay. So, let's take a look at this thing. So, I always go through and I kind of, whenever I look at a new ticker, I always try to figure out a couple things. We're going to go ahead and pull up Dilution Tracker. That's always where I start because some of these ones I've never heard of. I want to make sure there's no like huge, issue. So, like, for example, here, we can already see there's high risk on this one. So, it's healthcare pharmaceuticals. So they are a clinical stage biopharm focused on development and advancement of therapeutics to address unmet medical needs that for benefit of patients with nervous system disorders and other rare diseases. Let's see. They have late stage clinical trials. It looks like assessing ASIB, major depression, post-traumatic. Okay, so they've got some pretty big neurological ones in play. Okay, so that's what they do. So you see right here, they've got a float, it looks like around 106 million, which is, higher. Low market cap, which means that the stock price is, it's sub $1, right? On top of that, you have a high offering ability, you have a high shelf, and you've seen that they've historically diluted, and they have even more on the table. And their cash is right now 40 million, but they burn about 17, so they've got about 7 months of cash left based off that cash burn. They've got warrants on top of that for 6.6 million warrants at 84 cents. They also have $1.78 warrants, 2.2 million. And they have another, looks like Series A warrants. There are 300,000 of them at 29 cents. And it looks like none of them have tapped that yet. Those are all still active. Their notes convertible are not active. Their ATM is active. When was their last one they did? So they haven't done it in a while, but they've got some cash right now, but we'd have to take a look at... All right, so who are their biggest holders? BlackRock, 6%. Vanguard, 5%. State Street, a little bit of Renaissance in there. Geo Capital. All right, let's take a look. All right. I'm just looking at some of their filings. So that's from BlackRock. That's fine. All right. Let's see how they're doing on their financials. Okay, so cash. This is in thousands. All right, so cash has been going down. Total assets is lowering. Their liabilities has remained roughly the same. Yep. So shares outstanding was basically 105 million. Cut back on their research and development, which, you know, increased though on general and administrative costs. I love that. Yeah, shares outstanding went up significantly. Yeah, net loss. Let's see. Yeah, I mean, they're bleeding right now. Like, this is going to be one of those that literally it's going to be hit or miss. Like, if they get approved and everything's great, then they'll become a very profitable stock. And if they miss, then they'll get probably shorted into nothing. The shorts isn't even that high. They're just, you know, if I saw that right, short interest was, yeah, only 6%. So it's not even like getting shorted into the dirt. It's just, you know, they have a ton of dilution. So the stock is worth a lot less, and that's why the chart looks like this, because, you know, you basically went from half as many shares during this run to basically you're now in like a penny, you know, lower than $1 at this point, because the sheer amount of shares that you have there. So, you know, for me, is there a reason why you're particularly into this one, Jonathan? You know, it's higher risk is what I can tell you. You've got basically an ATM of like 55 million shares. You got warrants outstanding for a couple million. So like, there's a high amount of dilution still on the table that, if you add all that up. Now, grant the ATM they may not need right now, but I mean, you're looking at least another, like, what number is that? Is that 3? So it's extra, like 5 or 6 million shares from warrants and that. And, if they run out of cash, then they'll need to dip in. But at this point, they look like they're okay for the next couple, months. But those warrants can be unleashed at any point. So if the stock gets, like, pushed up, yeah, I mean, it's all going to depend on their trials and how things shake out there. So you've got a little bit higher, which is better than some of these other ones for the institutional ownership. So that's not a bad thing. Some people are betting on it. Obviously, BlackRock, some of the hedge funds are betting on this. So, yeah, I mean, it's. I wouldn't put a huge amount in this personally. This looks like a pretty high risk play, but that's just my personal opinion. None of this is financial advice. So, for me, I probably won't touch it, but, if they're news, what I would do personally for this one is probably take a look and just keep an eye on the chart every once in a while, and then also set alerts to see if volume picks up, and also to see if, for example, news comes out on this thing. So if any, like, hot news comes out, I would set alerts for those things to let me know, and then at that point I'd probably re-look at it. I was thinking home run because of their phase 3. Yeah, and that's good and great until either it gets approved and everything blows up, or it fails and then the stock's basically worth nothing. CJ, what are the odds Ater will go bankrupt in the next 2 years? Really low. Like, they still had some cash left. They also have a lot less shares. So the shares outstanding for them, I believe, is like 68 million. And they will have extra money coming in. The biggest problem they had was they basically got screwed over by the shipping prices being, going from, 3,000 a container all the way up to 30,000 a container. Like, that just absolutely crushed them. All right. Do we need to talk about Ater now? So what's a timestamp on YouTube? Where are we at now? I have to write this down to try to put timestamps in. Okay, so we said 48, maybe? 48, and we'll go to Aterian. Yeah, so, like, here. We'll pull up Aterian, right? So, like, it's still, this is the remaining 7 million in warrants plus the, I think, pre-funded ones that haven't all gone, right? So, you see them right here. Oh, no, I take that back. Those are the warrants at 25 and also 15. If we get up to 25 to unlock those warrants, everyone's going to be super happy. But that's very, very unlikely right now, because these things up here, these 5 million shares, that's like light years away. We're sitting here at $2, and these things are at 25. So don't even worry about these things. If we have to deal with dilution up here at 25, I will be the happiest person in the world, because you're going to see a lot of really, really rich people who were, in on this play and have held a long time, because those warrants are not going to be unlocked anytime soon until they start getting really back in the swing of things. And these merger warrants at 15, there's only like 300,000 of them, so I'm not worried about those either. These ones right here are the ones that are probably the, what we would say is the most near-term thing. So Armistice and High Trail are the two owners of it, right? And they're for 320. So with the stock right now being at 230, just minimum to unlock these things, they have to get the stock price up to 320, which means that they need to get it technically higher there, because why? Anybody? because if you started diluting right at 320 and it drops it down to like 310, you no longer can dilute. So you have to get the stock price up to like probably like $5 or $6, maybe even $7, and then you can start diluting. At that point, it will drop back down. But for them, they have to give themselves a buffer. So, yeah. So like right now, they have the ability to still raise cash, right? Like, and we don't know these numbers to be true exactly. We're just estimating based off their like last couple quarters. But like they still are okay on the cash, and they have the ability to raise more money if they need to. Yeah, they don't need to break even. They want to. And here's the thing: like if you look at holders, right? So at this point right now, they own almost 8% of the company right now, right? Vanguard's at like 3 or 3.5. BlackRock's at like a little bit less than 3. Renaissance now has about like 2.7. So these guys up here, they have an incentive at this point to make money on this thing, and they're not rushed. Like they're gonna get the stock at these low prices and then sit on it for a while, because when they need to make some money down the line and they rotate into small caps, pushing it up, they'll make a ton of money because they got to average down their like shares at these low prices. Like this stuff all runs cyclically. Like you'll see phases where like all of a sudden SPY like large caps will go ahead and like tank, and small caps will be rotated into and start pumping, which is IWM. Right? So what you're going to see is these small caps are already starting to get some money put into them, right? Not a ton, because these things are all like down overall, but like I'm on the 1 hour. Let me go to the daily, right? But this thing's still a falling knife, just like the SPY is, right? But what happens usually is small caps are the first ones to turn around. These ones will be the last ones to go, because they've been the safer investment. But at some point when these things just fall off a cliff, when they finally hit a bottom, and these will go down with it, right? Like IWM will go down with the ship. But once these guys will hit a bottom faster because they're more oversold than these guys were. If I can pull up, let's see. Yeah, this basically right here, there was a nice run, right? This thing was going insane, right? Was this COVID? I think COVID, roughly February of 20. Yeah. So this is like COVID. And then this thing went on a tear. Like, and then if you look here, this is Wyckoff. You get the last rally up here and then fall off a cliff, right? And that's where we're at right now. So we're still on the backside of here. What we're going to need to see is probably another fall for another, I don't know, like 20%, 15%, whatever they choose. And then you're going to see accumulation start happening on the small caps. This stuff's still going to be falling. And then when this thing finally starts dumping out, they'll start pumping up some of these small and mid caps, because that's, where they need something that's oversold. And these things will be oversold first. So they'll rotate their money in here, stacking up their positions. And then what they end up doing is they'll make a ton of money pushing these things back up. Retail's all freaked out and sold because these things now are worth like fractions of what they paid for them. And then, they'll pump them back up, get retail to FOMO back in, and then they'll sell and put it back into large caps. Like, this is all a game to them. It's just, you have to understand how it works. So, yeah, like for me, I know they need to push the stock price up. So I actually hope they push the price down. And every single time they get down to these levels, I'm just going to lower my average. That way, when they do push the stock up, if I can get my average down to, basically 320 or below, I know for a fact I'm going to be profitable on this. Because when they push them back up, they're going to be worth it. It's just, if I'm going long on them, though, I don't care. But, like, if I was trying to get out, like, I would at least try to lower my average as much as possible. So, like, when everyone's freaking out, I'm actually celebrating usually, like, because I'm like, okay, I can get my average down now. Yeah, so for me, I'm not thinking about them like, like they've got plenty of, like, of opportunities at this point. They're still getting private placements. People still want to actually like invest in them. So no, Aterian's not going to go bankrupt or anything like that. They may have to do some more dilution, but that's like worst case scenario at this point. They already have those 7 million shares that they're going to be pushing out, but they'll get money for those things. So like, it's like give and take. Like, and the biggest thing I think they need to do is figure out a way of consistently making like some more revenue. Like, I want to see revenue growth go back up this quarter. And if it doesn't, they need to pivot and do something different. If they need to, like I've said it before, I think they need to basically contact their, people that have invested them. They need to contact them and say, hey, listen, you guys are shareholders. What do you guys want? What things do you guys want us to sell that will make things better? Because like, obviously, if they're not making money doing it the way they're doing it, they need to change something. And they're small enough or they're nimble enough, if they're not idiots, they'll figure out a way of like, hey, you guys are the ones that, supporting us. What do you guys want us to make? What products do you want us to like keep? They're using Amy right now to like sort some of that stuff out, but like Amy doesn't make money. It just looks at things and says, okay, analytically, this is what makes sense for us to sell. But let's ask some live people who actually have real money and figure out that. Like, AI is great, doesn't pay the bills at the end of the day. Or at least not yet. So, do underwriters have 13F forms? We can find out what they're underwriting. Whenever you get warrants and stuff like that on the SEC stuff, they will actually have the underwriters listed on there. And you can see for most of the time, let's see. Let me see if I can pull this up real quick. So, for example, if I go to dilution, right, and I say, okay, I want to see these warrants right here. If you actually go to the filings, you'll find out real quickly. If I type in maybe underwriter, all one word. Yeah, so for this one, it looks like there may not be one. On other ones, though, they do have it, right? Let's see. So on this one, no, there is an underwriter. It's Craig Halliam. But yeah, you should be able to basically see. On these ones, there was no underwriter. But on this one, there is. Craig Halliam is the underwriter. And if we go to Google and say Craig Halliam, they are a banking research institutional. And they actually get shares of Aterian when they do these things. So when they do these offerings and these warrants, they actually get like a slice of the pie. It's interesting. But yeah. So I don't think they fill out 13F forms. Maybe they do. Let me see. Does Craig? Because we know this one does. Craig Halliam, 13F. Oh, yeah, they do. I guess they have to fill these out just like everybody else, right? Because they actually might be, if they have enough ownership of some things, yeah. Let's see. So I guess maybe they're insiders on this one. It's a blank check company. Let's see. So that's reporting ownership, right? The Form 4 that reports SEC ownership. So, yeah. But anyway, yeah. So I guess they do have some sort of thing. But yeah, these guys actually get shares when they do these things. They underwrite these contracts. Yeah. So like for them, they got like 1 million shares just for doing this underwriting. They got like 1% of the total thing, just for being the underwriter. And they have the right to actually push this thing up to unlock their warrants if they want them. So Armistice gets most of them. High Trail gets the second most, obviously, like another 2 million shares. So there you go. Yeah, that's fine. So what timestamp are we at now? Hold on. So we're around like 100. We're gonna move over to GOVX. Okay. So we will go to GOVX. Oops. GOVX Labs. Huge amount of warrants on the table. That's what I noticed off the bat. Like, you've got more warrants than shares outstanding. So let's see what they're doing. They're late-stage biotech, developing human vaccines for infectious diseases and cancer with modified vaccina. I don't know what that is. I guess it's some sort of delivery system, maybe. A large virus carrying blah. That's some technical mumbo jumbo, but I'm guessing they have to do with vaccines. Okay. So they have some cash. So that's why they have a cash need as medium, just like Aterian did, because they do have some cash here, and they've only been burning about 4 million. So basically 1 point something million a quarter. But here's where your stuff lies. You've got a huge amount of these May 2022 warrants. Right, you got 12 million of these things, and the exercise price at 165. So if we pull up the chart on this thing, GOVX, GOVX. Yeah. So right now, you can see right here, you had a nice day here, but what's going to end up happening is you can already see this thing ran up and then got pushed back down. But here's what's probably happening is they may be exercising some of these warrants, because at 165, so if they got it up to 3, they actually exercise some of these warrants, and they haven't even done that. So maybe that was the ATM. Let me see. Or maybe they use some of these. Let's see what's going on here. Which ones have they used? Okay, so they did an RDO back in May. S3 for 165. What date was this? May. It was right here. So they got dilution right here. They got 3 million warrants right there. That's what drove the price back down. And now they're probably pushing it up again to try to unlock some more. Yep. So that's kind of what's going on with the stock. Is it looks like it's going through a series of like they push it up, they dilute, and then they push it up, and then they dilute. So, if you understand the cycle, then you can make money off of it. But yeah, and it looks like they have some sort of event coming up. Maybe what's this? Mystery event. Earnings. So earnings are on August 3rd. So there you go. So that's what's going on. They might be pushing the stock price back up during this time, and then they'll try to, dilute into it if that's what they're aiming for. Because, buy the rumor, sell the news, right? So if they're right and they've drove up the price, then they've already bought it down here, And if earnings suck, they can just dump out and short it. So there you go. But overall, yeah, it's just I can see why people are paying attention. All of a sudden, you got a day out of nowhere, 200 million shares traded. You're like, what just happened? All right, so there's that. Let me make sure there's nothing else going on with that thing. But yeah, there's a good amount of dilution on the table there. So just be careful of that. All right, you guys want to do APRN again? All right, what's the timestamp now? 105. 105. APRN. Oops, don't want to do that. I'll delete everything I just did. APRN. Okay. So here, APRN. Blue apron, right? Do. There we go. APRN. All right. And once again, if anyone's curious about this, this is Dilution Tracker. If you're new to the channel, so we actually have a thing with them. We actually get a discount in the Discord for anyone that is interested in their product. They have a great product, and it makes things a lot easier when you're kind of looking at these small caps, especially because they keep track of dilution for you. All right, so Blue Apron, overall risk high. Historically, they've obviously diluted, and the cash need is high. So they've got about 4 months left based off of 28 million quarterly cash burn and 40 million, or roughly 40 million in cash. All right. Warrants, don't have to worry about them right now because all these warrants are 15, 18, and 20. And the share price is like, what, 290 at 296. So don't have to worry about the warrants right now. If the thing ran all the way to 15, I'm sure most people would be happy. But so they did a private placement on, looks like May. $1.7 million shares. That would have been this one right here. It looks like from there to there, it must have been what, like 3 million shares. Not even 1.7. There must have been something else there too, because it went up from 31.4. Went up 3 million shares in actual dilution. So they must have did something else. Okay, small float. Let's see. All right. Short interest. Let's see. Utilization did drop slightly. It's just a weird anomaly when sometimes it goes slightly less than 1%. It will break up that line. We noticed that on the Aterian too and a couple other tickers. All right, but heavily shorted stock. About 25% of the free float's shorted. Anything over 15% is high. Like, that's a good amount to be shorted. In this case, it's equivalent to roughly 3.7 million shares. They're saying that they covered some from earlier. That may have been this run up here when they covered a little bit, but then they're pushing it back down. So I'd be curious to see what the new numbers come out for. They should be coming out pretty soon, right? On the 15th? Or, sorry, the 1st, maybe? Roughly. Alright. So, But yeah, utilization's high, cost of borrow is still pretty low at this point right now. So it's not quite there yet, but it's definitely at some point going to see some action, is what I would say. Because if they push it back down again, I don't know what their previous low was, but let's see. Some threes there. Yeah, so, I mean, we'd probably have to take a look at their... warrants I'm not worried about, because warrants are much higher up. And they've already done most of the dilution, it looks like, over here. So, it's more just, they've got a pretty high cash burn, and they're running out of cash, so they may have to do something else in the future. So that's the only thing I'd be careful of. If they get like a slightly higher stock price when they push things up, they might issue some sort of dilutive thing to basically keep the business running, because I don't think they're profitable yet. Yeah, the current assets have gone down about $20 million worth. Liabilities have grown. So, yeah, the shareholders' equity has shrank also in the last year or so. Yeah, net cash flows so they're having some money problems. They need to get some stuff going. All right. So there's Apron. Blue Apron. It's obviously like it carries some risk, but it is what it is. Now they just got to deal with Walmart. Good. They need to once they make some money, they'll be much better off. Because right now their cash is not flowing in; it's flowing out. So. But yeah, that they'll probably, if they turn things around, the shorts will close and they'll be fine. It just depends on how big is the deal with Walmart. All right. Are you guys going to go through every one of your tickers that you have anything invested in? Get to cover them. All right, hold on. What's the timestamp now? Like 113. Revlon. Rev. And Rev. All right. So a lot of consolidation. If you were going to draw this out, you can clearly see, if you draw that out, it's coming into this, make or break moment up here, and we have to figure out what's going on with the thing overall. So let's take a look. So they actually have a pretty low, right? If you look here, shares outstanding 54. There's only about 4.87 million left for like dilution from an ATM they have, but I mean, they are actually cash flow positive. So they have positive quarterly cash flow coming in. They're basically just restructuring. So they can raise money if they want to, but they don't really need it. If we go to... Alright. Let's see what this one is. This was filed on... inability to timely file or part of a form. An 11K. All right. So let's take a look here. They got 54 million shares. All right. So if you look here, cash went down about 30 million. Slightly less trade receivables. I'm guessing it's like accounts receivable. Inventory has grown though, so they're sitting on inventory. Prepaid, slightly less. Looks like we've got some goodwill in there, so I wouldn't count, like, this is a lot of the stuff's fluff. So if you look here though, you still have a deficiency on shareholder value because they basically have liabilities that equal the same. Even though they're cash flow positive, they still have a good amount of liabilities. So accounts payable has grown, accrued expenses and liabilities has shrank, which is good. But overall, you know, even though you improved here, your accounts payable grew. So, and it's probably like this, you know, the shipping crisis has basically screwed up everything. And it's made things a lot more expensive to get from Asia to the U.S. So, I mean, Danny, just to, SQQ is just inverse of the QQQ. So, like, there's not a whole lot to cover there. It's literally just a leveraged inverse ETF. So whatever the QQQ does, it does like the opposite based off the leverage on it. So, but yeah, like I wouldn't like cover that so much. Like UVXY is the same sort of thing. It's kind of like, but most people don't understand UVXY, so that's why I just wanted to cover the VIX Central. Like right now, it's just flat and it's been going down. So. Net sales increased though, so that's good. Selling general expenses, not as good. Cost of sales went slightly higher, but that's fine. Yeah, but the net loss is better than it was. But I think they're taking this time to basically do Chapter 11, like a restructure. So that's what's going on with Rev. But 70% of their float's short. So, I mean, at some point, they're probably going to fly up, you know, pretty aggressively unless they get a massive amount of dilution or something like that. But, yeah, they've got a really small shares outstanding. Like, the float's only, like, it's less than 8 million. So, yeah, we can do GameStop. All right, so that was Rev. Are you satisfied with that explanation of Rev? What's going on? If you want to look at the chart, it's just consolidating. Like you had this large draw up, it's came back down. Now we're basically just cutting around here, and at some point, if they can push it back up to this like 550, that's kind of been like they're holding ground. So like this range right here will be super interesting what it does in the next couple days. Because as it gets further out, you're going to be basically in that wedge that's drawn out. Like you would draw it from here like here out, and eventually like here-ish, and like looks like mid-August you're going to see something happen. So they're going to break up or break down. So yeah, I mean the Chapter 11's they're just using it to, my guess, restructure. So like it's, if you actually look, they're basically net zero. Like their assets are slightly less than their, like liabilities. They have a high amount of liabilities, but this gives them a chance to kind of like shed some of that stuff if they do Chapter 11 and restructure. So yeah, we can do GameStop. Oops, I need to do timestamp. Timestamp is going to be 120. 120. GME. Okay. GameStop. I am shocked that nobody's asked about Tblt today. I got a whole bunch of people on Reddit asking me about it. Somebody even tagged me. Alright, so there's the 4-to-1 split. You got an email saying that they took out an insurance policy for Rev. Yeah, I mean, like, it all depends. Like, from what I saw, like, they're not in, like, they could do like a private placement. There's a whole bunch of things that they could do. They still have a pretty small float on Rev, but I think what they're doing is taking advantage of a time where they can basically like fix some things in their business and then become more profitable. So that's, I think Chapter 11 sounds scary, but if they do it the right way, it'll be fine. What is full ratchet and dilution? We have to go over this now. All right. How do we explain full ratchet to you guys? Yeah, so it's kind of more than just like a 5-minute, like, it's I'm not going to do full ratchet stuff like that at 11 o'clock at night when I'm going to be signing off in a second. But if you guys want, remind me tomorrow and we'll go over it. But basically, you've got like weighted average, and then you also have like these ratchets. So if you start going through these like warrants, you get like different considerations. There's a whole bunch to it. So let's do that. Let's do it tomorrow, because I don't want to get like into this now. But it basically allows anti-dilution protection. So like in event of rounds and series adjusting, they get converted over at a different share price. So they basically get a good deal, and that's why a lot of these warrants, they want them to be full ratchet. And you'll notice that in some of these things, like they'll be listed as full ratchet inside of the description. I think BBIE had some full ratchet, if I remember correctly, and so did Mullen. So if you look here, you'll see full ratchet right there. And I think Mullen had some full ratchet ones too. Yeah. Oops. Mullen. But yeah, if you want, I'll get into that with you guys tomorrow. But what you see right here, yeah, cashless full ratchet ones. They have all these different specific ones for some of these ones. Like, you can tell I'm getting tired. All right. We didn't do GMA though, did we? We started talking about it. We didn't do it. All right. So obviously nothing going on with GameStop as far as like your biggest holders are Vanguard, BlackRock, State Street, Geo Capital, Northern Trust. Renaissance has still a small position, but I'd like to see them increase theirs, because last time they increased theirs, they were the ones that made some good money on GameStop. All right, so let's do this. Yeah, I've seen the Brian Cohen tweets about like Blockbuster, and it's like I don't know if people are reading into it too much, and maybe this is just my personal opinion, like because everyone's interpreting what he's saying as like this deep, and sometimes I think he just messes around, like, you know, like sometimes I think he drops hints, and other times I think he's just messing around, being like, wonder if I just said something. But I did read the thing about the zombie stocks, right? And I understand the concept behind them, and I think that that's an interesting thing. But once again, those are not traded like stocks anymore. Like those are like things, and they're saying like they can use them for like liquidity, basically. I've never seen that personally, so like I'd have to probably, for me, I had to read up and understand, because nothing I've ever seen has ever indicated that these guys are able to pull liquidity from a dead stock. I know in theory it should work, but like I've never heard of that before, and there's a lot of stuff that gets pushed out there sometimes on Super Snock that's like the truth lies somewhere in between. So they're like, oh, look at this corruption and this, horrible thing. And they're like kind of right, but it's like there are like practical purposes to certain things, like, like dark pools, they do have a function, but mainly it's just to protect rich people. We don't let the poor see that we're selling, or else everybody will sell. But there are like practical times where like dark pools actually make sense, like rebalancing and stuff like that. Like when so I'm just saying, like, take it with a grain of salt sometimes with stuff you see on Super Snock, because at times they get a little tinfoily, and there are sometimes regular explanations for things that are, All right, so let's just cover this. So right here, right, everybody was excited. They got the drop. Boom. We got the 4-to-1 split, and they're pushing it down. But they're pushing it down really low volume. So I would say this. To me, this looks false. This looks like this here, where they pushed it down on small volume, and every once in a while these things just pop, and the stock will, you come up to these levels, and my guess would be around $30 would be kind of like the level where it would find some good support, and then basically like you're going to chop back up. Like they already think that it's probably going to run above this, So what I would say is look for good entries. It could turn around tomorrow and head back up, but I think they're going to try to push it back down to these levels, to basically like 30. If you look here, 29, what was it, like roughly 29, like 40, 50 is a pretty good area of support. I'd probably have to look at the actual support lines, but I'm just eyeballing it. That looks like a pretty decent level of support in the past, around like 29.40. So I would say, for me, I'm gonna, I've been slowly buying a couple shares here and there on the stock as it's falling, but like just dollar cost averaging down, because I that's how I typically will treat stocks that I want to gather stuff in. Is when they're going down, I buy more. And then typically I just sit on them when they're chopping up and making runs, because I don't want to overpay for things at times. So for GameStop, for me, I'm gonna see if it gets down to these levels, and hopefully I get some fills down in like the 30 to like 32, down to like the 30-ish. If it breaks 30, then I'll definitely buy a bunch more. Blockbuster just got licensed for NFTs. Which Blockbuster? There's the corporate one that went under, and then there's also like a LLC that still operates with a logo and stuff like that. So I'm curious which one it was. I don't think Blockbuster is going to make a comeback unless they get like a bunch of funding. Let me see. Are they still technically in business? They ceased operations in 2014. And I guess they're technically owned by Dish Network? Is that right? So Dish Network bought Blockbuster and its brand out of bankruptcy in 2011. At the time, they still had 1,700 stores, which the satellite company had planned to use to sell its products. Blockbuster is trapped in brand limbo. Will it ever get out? This might be an interesting article to cover, but basically, it looks like they're still technically a brand that belongs to Dish Network. But Dish is not, like, doing anything with them. So, I don't know. Yeah. Short talk trash on Anon on StockTwits. Do they? I don't really go on StockTwits, to be honest with you guys. Yeah, it's fine. I've got haters on all sorts of different places, like Reddit, StockTwits. It comes with the territory. Like, I try to help people out. I try to, like, provide information for them. I'm not quite sure what their beef is, but whatever. And I've shown you guys this before. Like, there was a guy that took issue. He was like, "Oh, you're making money off retail investors." I'm like, I'm really not, because everyone assumes if you have like a YouTube channel that you must be like raking it in, right? And like, I've shown people this before, and I don't think it matters, but here, just if I drag this across, I'm gonna make $45 for a month. Like, I don't make any money off YouTube, and most people have cut their Patreon donations, and so all the money that I got from Patreon, I used on subscriptions to Vortex, Dilution Tracker, Morningstar, Fintel, and something else. So all that money's already basically used up. So, and then I just shared the stuff with you guys. So, but yeah, like, I don't do this for money. I do this mainly just to share this with you guys and talk about stocks. And if anyone can learn things, then they say you never show positions. Yeah, I don't show positions at all. Like, I've shown when someone called me out once, and I mistakenly got pissed off, and I just said, all right, whatever, and I showed the shares executing. I don't know. I mean, people still buy GameStop. DFE hasn't shown his position in a year and some change. And he probably, and from what I understand, I had a couple of friends who are lawyers, and they're like, you have to basically stop. He's like, you're basically, especially with some of these small caps, like, they're like, you're technically, quote unquote, becoming a person of influence. You need to basically stop, because, if like Trey came in and was like, you need to buy Aterian with 300,000 subscribers, that would be, he would probably have the SEC looking at him real hard. So that's why he can't say stuff like that. Like, he's talked about Aterian in the past in the form of, like, look at these brave people. I wish AMC did that. When the NF was actually tweeting out about, like, naked shorts. But at the same time, when I was talking to my buddy, he was like, listen, like, you've got more to lose than you think. Like, if they came after you, they could just tie you up in litigation for, like, weeks and months and years if they feel like it. And I'm like, well, that shouldn't be, like, I'm not doing anything wrong. They're like, it doesn't matter. It's going to cost you money, and you'll have to represent, like, unless you're representing yourself, you're going to pay a ton of money in lawyer fees. And that's the point, is like, you can't really afford them. They can just screw you up by just pressing, charges. I was like, they can press charges for me, like an anonymous person, and they're like, you're not anonymous, like on Reddit. Like, you may think you are, but they already know your IP address. They already know who you are. Like, I was like, okay, well, but yeah, like, it doesn't matter. I don't know any of your positions. I don't really care. So, yeah. I'm aware of how much money I have and don't have. So, you show me somebody that shows every single trade that they're, like, those people in stock twits, where are their positions? Doesn't matter. It's not a team game. Like, trading is an individual, like, thing, and people make decisions. I can tell you right now, I did not sell my Aterian shares. I didn't write cover calls. It's not my thing. I lost a ton of money on the May, options, because I thought the gamma ramp was there for a reason, and it was, the problem was it coincided right with the market crashing, and people got really spooked and they bailed. There was just a little bit of delusion that happened on Aterian during that time frame, and it caused this and doubt. And then this doubt right here, if you look, I think we still have gaps to fill up here in the 4s, but, like, we're not going to get them until people come back in. So those gaps will fill eventually. Shorts are dumb. Yeah. But yeah, personally, for me, I could care less. I know what I have. People that have been around me for a long time know, I didn't sell. Not planning on it either. Like, I'm just going to average down. All right. Here we go. So we need to do, where is it? I hope they don't reopen. I owe them $10,000 in late fees. All right, you want to talk about BHAT? But yeah, GME should see at least, it'll probably get pushed down slightly more, and then I'm looking to enter in some more, because I think in the long run, I think you're going to see another large run up on them, because I think you'll see more. Excuse me. This is still very low volume for a 4-to-1 split stock, right? That means people are still buying, but all that stuff's getting pushed off exchange. So, like, if we looked at, let me just see. If we go to GameStop, wonder what the historical. Yeah. So, like, right now, 40% of the daily volume is getting pushed off exchange for GameStop, and then it looks like, just looking through here, yeah, they shorted like 5 million shares on Friday, and then they shorted another like 2 million. So it was like half the volume was like short. Donkey, check your DM. All right. So BHAT is at what timestamp? BHAT has warrants, right? Is that what? So no, it's just a different ticker. Whatever this Australian hedged return. All right, so BHAT, this is the Chinese software company, right? And I think we've talked about this before. I know you guys are into this one, and I know they had some stuff that came out. I'm trying to find it. Let's see. I know, Dirty, you found this way back here, and you picked up some, and you wrote it from like cents all the way up to like a couple dollars. Because I think that weren't they like orchestrating some sort of like share buyback or something, or yeah, they've got warrants at 11 and 13 here. Warrants at 11, 20, and 13.30. Right? They also have a little bit left on their shelf to raise. They did an RDO back earlier this month for about 1 million shares, right? But they still need some cash. They're low on cash. So short interest has now climbed to 24%. So that's better than it was on this one. So this one has the possibility of moving, but the cash is what they're holding on for. That's what it looks like to me. Right? So you got pushed down here, you gapped down. You didn't fill this gap though, did you? See, that's the only thing I'm worried about right now is there's still a gap down here. Pretty big one. Like gapped up and ran, and it never went back. And so now I would say from like 109 down to like roughly like 50, was that 50 cents? 30 cents? I can't even see. 88 cents, roughly. Like 90 cents, 88 cents, something like that. I'm just eyeballing it, but yeah, 89 cents roughly. All the way up to $1.08. So there's still a gap here, which makes me a little bit nervous because gaps do like to tend to fill, and there's less liquidity down there too. And being that they have not a lot of money right now, would we see more dilution? Tiny float though, so these guys can instantly go on reg show pretty soon. If they get any sort of like pressure going on them. Let's see. Yeah, if the volume picks up on this thing will fly. That's what I see. Cost of borrow is already high. It's constantly growing for short interest. So basically shorts are banking on them diluting, and if these guys get some pressure, this stock will fly. So yeah. It's got all the positives. Yeah, I see now what you're talking about. Yeah, there's a couple good things about this thing, but utilization's been choppy. It's weird. Yeah, I don't see how that works out because utilization should be higher, especially if the cost of borrow is like 400%. But yeah, if somebody writes some decent DD on this thing and kind of explains what's going on, this thing would definitely move. All right, what time do we start this BHAT thing? I took my eye off the ball. All right, so well, you loaded it up for fun. Well, I hope you loaded it up back in the 60, 70 cents because you'll be making some good money then. Getting tired. All right. So BHAT was sometime around like one. $144 or something like that. Is that right? 44 question mark. Okay. This was linked to Tblt stock twits. What was? Mashed in what was linked on Tblt? Your stream was linked. Do you cover? Yeah, Tblt. Yeah, I can cover it real quick. All right. What's the timestamp now? I'm trying to keep track of timestamps because people complain that these videos are long as crap. And all right, 1:45-ish. This one must have been like 1:40. This one will be 1:45. So I'm trying to become a little more organized because people are complaining, like, I'm not going to sit through, like, hours of your incessant talking about things I don't care about. I want some timestamps. So I was like, all right, fine. I can do that. All right. So we're going to cover Tblt. All right. So here's what I want people to know. I'm not against Tblt. I hope it squeezes to the moon for you guys that are in on this. I looked at them earlier and I thought that they were an interesting setup. I didn't buy them though for one particular reason, and it's a pretty big reason, which is they don't have options, therefore I don't have the ability to hedge to the downside. So let's go over why I would want to make sure I have the ability to hedge to the downside. Okay, so Tblt. Great setup. Everything looked great, except for it's a lot of risk on this play. Overall, you have a high risk. You've got a dilution shelf that's pretty high. Historically, you've seen a lot of dilution already happen, and they need cash. And I covered this last week in the video, but everyone seemed to ignore it, so I'll kind of explain again what I saw. And so this number was different back last week. So at the time, they had a negative number here for cash and how many months they needed. This is including the new, I think, $20 million that they'll get from the private placement they just did, announced this morning. But this number was negative last week, and I was explaining that based off a cash burn of roughly $10 million, which breaks down to like 2 point something, what you will see is typically like there's still accounts receivable coming in, and I showed that on the balance sheet. I guess I should do it this time again because this one might be time-stamped and people might actually watch it. All right, so if we go to filings and you go here to the 10Q, all right, you'll notice here, and this is what I pointed out last time, your cash went from $7.4 million to less than $1 million here. And that's a big deal. Now, granted, you still have $15 million in accounts receivable, but that money doesn't come in all at once. That money comes kind of like a trickle. So, like, they have needed cash pretty badly, right, for a while. Their inventory's up. That's great. They can convert that over to accounts receivable, but until accounts receivable becomes full-on cash, cash was low. So there was a high need for cash in this business, right? Overall, everything else is fine, but the biggest issue is when you don't have cash to run your business, that's a problem, especially when you have AP right here, which grew from 14 million all the way up to 21 million. That's a pretty big jump. So, therefore, yeah, sure, you're still positive shareholder equity, but at the same time, you have a jump in accounts payable. You need to pay your bills, and you don't have enough money coming in over here. So that means that you're going to need dilution because they don't have another way of making that much money to actually supplement that. So you would turn to dilution in the case of a small cap, especially one that has a small float, right? Okay. So people want to know about this, right? So right now, Ortex is reporting on Tblt, that there's only 2.1 million shares in the free float and only 2.13 shares outstanding. This is not actually correct because they had a placement back in June, and I don't think Ortex has kept up with this. That's a problem because people are literally trading off this information, but that's not actually what's happened. Shares outstanding from last, and people, I mean, this is to show you how bad this stuff can get, right? So if we type in Tblt shares outstanding, right? We should know this. This should be an easy thing, right? What's this? Beta what? No, just give me the numbers, right? So they're saying it was 1.3 or something like that. What was the number? Where's that? Where is it? Shares outstanding. Shares outstanding, right? Right here. 2.13. That's what they're saying there. That's what they're saying here. 2.13. The problem is this. You had a offering back here, right? That was finalized. And these things became dilution. Now, whether they've been exercised or not, we don't know. But at this point right now, it's still on here until we see that that's been tapped already. We have to assume that these shares are able to be diluted. So you have to include that into the float then. So if you were here at less than 1 million shares and you added in 3 million shares roughly, you would have this, 4 point something, right? Well, now the current shares outstanding have grown to about 8.52, and that's because you just added today's placement, which isn't even on here. If you type in Tblt private placement, right? Right, so they just announced $20 million private placement. Now, this is like that weird thing where it's dilution, but it's not really. But either way, 4 million shares of common stock right now, or pre-funded warrants in lieu of, but they'll probably do. That's going to go towards this number, right? So you had already 3 million, right? Right here, or sorry, 4.52 million historically as of June. That's after that, these June warrants came out. Now you're adding another 4 million on top of that. So now you're at 8.52. And on top of that, you still have some of these warrants here and an active ATM. ATM's down here. Right? So the ATM's right here, and you have the ability to raise another almost $13 million off that. So, yeah, a bit ago, I mean, they diluted today, but they also diluted back in June. Yeah, like right here. Here's the, if you want, I'll copy and paste this for you, and you can take a look at it. But they diluted back in June. So right there, that's the June warrants, not the July ones. The July ones that just went through, that was 3.1, right? So that 3.1, if you add it up right here, you had less than 1 million there. This was the 3.1 going into there. Now you have 4.52, and then you just added another 4 million on top of that. So if you had 4.52 plus another 4 million common shares, right? That brings you up to 8 million. They're still using 2 million here. So all these ridiculous numbers that you're seeing here are based off of 2 million shares, not 8 million shares. So what's the actual sorted interest? If it's 4.1 million roughly, right? That means it's half, not 196% of the float. It's more like 50% short. Yeah, it's still high, and it will probably move. I'm not saying that. I'm just explaining to you there is something here that is dilution. And dilution, what happens is when they start diluting, right, when they start exercising these 190 warrants, the price is going to start coming down. Now, if retail keeps pushing on and going hard, then yeah, they can basically buy up all those warrants, and then they still will be very, very short against the stock. They need cash though. Like even with this cash here, right? They infused $20 million, and already based off the estimated cash burn, they'll have less than a year's worth of cash needed based off that current cash burn. Could they reduce? Sure. They can do that. But at the same time, I'm trying to explain though, you've also got these Series B's options here at $5, right? Another 8 million shares. Like, these ones aren't registered, but they're there. This one's 27 or 37. I'm not worried about those, but these $5 ones, they're in play, right? And when did they issue these? Right, so they're not issued yet, but they will be. So there's Series A options and Series B options. So if this thing runs a little bit hotter and goes up, they might be able to dilute depending on when these things get registered. And the problem is because we don't know when these things get registered, there's always that like basic thing in the back of your head that's going to go, you have to be careful because at any moment the shoe can drop on these things. So, yeah, these are the new warrants right here, the Series A and Series B's, and it's probably based off Class A and Class B shares. I'd have to. Yeah, this is on the fly. Let's see if I have any up here. Tblt looks messy. I mean, yeah, so if you look, it gets a little convoluted, especially look here. So you've got these Series C, D, E, F, G preferred stocks. You start getting into these like, okay, where are these shares going? Where are they ending up? Overall, I think it will move, and then I think it's going to dump, and then depending on how much money they've raised, it could be worthwhile to take a look at them longer term after dilution's already hit, in my opinion. That's when I'm going to look at it. For me, because I don't have the ability to hedge this with a put or short it, because I think it's hard to borrow right now, and your average person can't short it. I'm not willing to take one side of this and just hope that it continues to just go up, especially when I know at any point these warrants can hit. So for me, it's not worth the risk. For other people, yeah, squeeze it to the moon. But for me, I'm not messing with this thing just because I'm not able to hedge to the downside, because this thing's going to move aggressively down just as fast as it moves up. All the indicators right here show, if you look, see, our side just quickly, reversed, right? You're going to see some weakness here on the MACD. You already see the ADL pushing down. You can see right now the price trend, switching over. CCI got crushed, and we'll see what happens tomorrow on this thing. But, yeah. I mean, and, Redbox, they, had a massive day, 81% up. At times, I think they were 120% up. I still have a put on this thing at 13. So for me, I'm just going, all right, well, I could care less. They basically killed it when they got rid of the options. And I can't even get a fair price for the options, because you would think at 13, those things would be super profitable. And because there's no competition and you're only selling it back to the market maker, they're basically giving you the intrinsic value, and that's it. So you're not getting any other factors. So at this point, it's almost probably more profitable just to exercise it and have them yell at me that I can't have those things. Yeah, and I don't know if Tblt will get all the way up to past 10. We'll see. I mean, I guess it all depends on, if retail really is in on it, and but I feel like some of the momentum it got crushed today. And like I said, my intention is not to like deter anyone from trading how they want to. I just want you to know the facts, which is, like there are warrants on this thing, and you have to just be careful. Like, don't lose money on this trade. Like, for the people who bought down here and ran this thing up, that's awesome. Like, great. Like, just don't give it back to them. Like, make sure you make your money. But yeah, like I have no position in this at all. So for me, I'm taking a look at this and going, all right, so I see some momentum got killed down. They're probably going to be, rotating, their money around to different plays here and there. Like short squeeze is always typically like dogs chasing cars. Like they never actually catch them. They just, run at them, FOMOing at anything that's running hard, and then typically most people are losing money in there. So I'm just trying to encourage people to look at all the facts and understand where everything stands. So yeah, that's my take on Tblt. For me personally, I'm not playing it, but I wish everyone the best on doing it, and I hope you guys, whatever you decide to do on the trade, I'm good with. It just, for me, I'm just trying to provide you information. So, yeah, but I mean, I've already been told that I'm spreading FUD because I talked about the warrants, and I'm like, that's not fair. Like, you have to tell people about the warrants, or else people are going to sit there and not understand why the stock's moving down against you when you've got warrants sitting at 190. And like, what do you think about Red Bucks that cap bounce today? So I think they had a ton of FTDs, my guess would be, and they basically were, having it finally caught up to them, because you basically have had this falling knife here with a couple exceptions of like here, and they needed to actually cover some, is my guess. So this is them covering. They've already gotten a good amount of people to sell, so they covered these ones. People might FOMO in, and they'll short it down. But we'll see. This. If you look at everything, though, you had a huge spike in volume, huge spike on RSI. That also is making the MACD now crossover on the daily. So, like, this thing could go a little bit. The money flow never really flowed out, and it just more money flowed in today. So CCI went over. I mean, you're crushing down on the TTM squeeze. You're starting to actually like get momentum back to the upside, and you got a green one here on the awesome when it should have been deep red. So yeah. I mean, we'll see. I'm still short at I'm not short, but I still have a put at a couple puts at 13. For me, I didn't freak out and sell today because I think if I think they're for August, if I remember correctly. But if I have to, I'll go do a short position on it, because I do think when the merger news actually hits, this stock's gonna fly down and be worth like, I don't know, like less than $1. So. AEMD trading around 117 has $16 warrants expire in September. Do you think they'll go for them, or they'll let them expire worthless? They'll probably let them expire worthless. Just a guess. I don't know what that company does, but that's a huge jump. That's like, like Ater trying to fill the ones at 25 or 15. Like, it's probably not going to happen right now. And if they expire in September, they may. I mean, it depends on the underwriter. Let me just pull up that one for you so we know if there's an underwriter on it. All right, ticker symbol AEMD. Okay. So, Short interest is pretty low on that one, actually. They just don't. You got an active ATM. The warrants they have, they're tiny, so that they don't care. That's 300,000. Yeah, those will expire worthless. Yeah, so that is not a reason to buy the stock because they are not pumping it up for 300,000 warrants. That's a tiny number. You know, even on a stock that's got a smaller float, like that's still very small, and they will not probably. They'll take the L on that one. They actually got some of them out. If you look here, the remaining warrants. So somebody did exercise some of them at some point. But this ATM right here, that's what I'd be looking at. Because that ATM will still a good amount. It's like doubling the stock, basically. So yeah, I don't know what this company is. I'm just reading the ATMs go against warrants. No, not necessarily, but basically what you're looking at is you have a huge amount of ATM right now, right? This ATM right here. So they got it back in, I guess, March of this year. But you've got $15 million worth of ATM capacity versus, 300,000 shares that are trading right now at, what was it, like AEMD, $1? Yeah, like you're not going to see that jump. The underwriter is not going to get that. So, unless they actually discover a cure for cancer, then they'll go much higher. But like, I don't see that one doing anything. So, all right. I've already gone way too long. I was supposed to get off at 11, go to bed. So, but we did cover Tblt, and I guess we finished with AEMD. All right, guys. Thanks for staying up with me. If you have any interest in joining us in the Discord, you're more than welcome. It's free. I'll provide a link here for you. But yeah, I should have gone to bed a while ago. You guys were asking me questions, and okay, here we go. Invite people. You are the people. All right, so there we go. Here we go. Thanks, awesomeness. Thanks, guys. And if you can like and subscribe, that'd be awesome. As you see, there's the free Discord that you're able to join us and just talk about stocks and everything. A lot of people are hanging out in either the main chat room, or there's actually now like a main chat room inside the Aterian channels, but that's just where everyone hangs out. It's probably the most lively spot on the Discord. All right. Well, you guys have a great evening, and I will see you tomorrow, and have a great evening. Get some good sleep.